Hi, I'm Joel Yarbrough. I manage Asia Pacific for Rapyd, the global payments network. And I'm thrilled to be here today to help talk about the world beyond cards and how critical it is to have non-card-based payment methods to be able to expand your business globally and maximize conversion. So as everybody here knows, of course, retail e-commerce has been scaling dramatically over the last 10 years. Prior to the virus, we expected retail e-commerce to grow 18% year on year. With the virus, and there's obviously many different stories and many different businesses in terms of how things are going, but we're already seeing numbers reported for the second quarter from plus 20 to well over plus 100% for certain businesses. Obviously, there's some categories where that's not going to be true, but lots of categories have made the shift to online and buyers are finding them there. And obviously your interest in being in this conference, I'm sure, is magnified by the essential nature of going online for your business or expanding the categories and the locations you sell for your business. When you look at e-commerce trends at a site level, we also see a 33% growth from March a year ago to March this year. And obviously you can see from the line the numbers that continue to go up of site traffic moving forward. So where are the top e-commerce markets? Again, prior to the virus, these bubbles represent the gross size of e-commerce in each market. The ones that are in blue are markets that have essentially homogeneous or close to homogeneous payment cultures, where people use credit cards, they use PayPal, they use bank transfer in Europe, etc. The ones that are in yellow are ones that the payment culture country by country is actually completely unique, right? You won't find very many similarities and certainly no technical synergies as you start to operate in those yellow countries. You're re-implementing payments in every single one of those markets in a different way in order to be locally relevant in those markets. As the market continues to shift south into the east, the importance of this to you goes up dramatically, right? We expect that by 2023, estimates range somewhere between 60 and 80% of global e-commerce is actually going to be happening in Asia, in a market in which payment cultures, as I said, are entirely unique one to another. And what's that mean? That means that 70% of online payments are made not with credit cards, but are made with other payment methods at a high level: cash, bank transfers, ATM deposits, local debit schemes, some of which are cards, some of which are not. And then eWallets are exploding in most countries around the world. Why is this, right? Payments is a national priority. Starting roughly 10 years ago, individual countries started to develop local payment strategies for a lot of reasons, some of which were to lower prices, implement fee caps. Sometimes it's about financial inclusion, ensuring more people are in the market and they recognize the weaknesses of a cash economy. In some cases, it's about KYC and local data rules, but the implications are very clear that local payment cultures will continue to become more and more different over time, even though they'll rhyme to some degree. They're not going to be the same anytime soon. At Rapyd, in April of this year, we completed a payment study looking at individuals' payment preferences. If you look at the left-hand side, you can see cards in markets like Japan and Taiwan that are very mature and have been mature for a long time. Cards are preferred by customers 60% of the time. But as you move to the right, you can see that number dropping dramatically. It's basically tied in Singapore at 50%, South Korea 45%. And by the time you get to the massive growth markets of India, Thailand, Indonesia, you see cards that have fallen dramatically in terms of preference. And what replaces them? What replaces them isn't cash, right? Cash is what we often talk about. But in reality, it's actually e-wallets and bank transfer. E-wallets, I think a lot of people understand because they know the success of certain wallets like WeChat and Alipay, but there's a universe of other wallets that are extremely important. PhonePe and Paytm in India, True Money in Thailand, GrabPay and GoPay in Indonesia, Gcash in the Philippines. And these literally are dominant ways to pay that people actually prefer. Bank transfer might sound a little bit weird to the international audience, but it's absolutely the preferred way to pay in lots and lots of countries in Southeast Asia and around the world. And bank transfer is only getting faster and better with new standards like UPI, PayNow, PromptPay, QRIS, NPP, acronym after acronym, all of which roughly mean real-time payments for very little cost. So it's great for merchants, it's great for consumers. And as we've gone through the virus, more and more consumers are aware of these payment methods. They're aware these payment methods are very advantageous for merchants. And they're actually actively trying to use them so that merchants can actually save some money. So it's a very interesting synergy. And we definitely see that in the data, that these other payment methods become extremely important. When you look country by country, just some examples, Malaysia, 60% of Malaysians use a wallet called Touch and Go very regularly. The other dominant wallets, Boost, PayPal, GrabPay, all very, very popular. Indonesia, people use OVO, which is part of the Grab network. People buy games online 43% of the time. 66% of Thais use True Money at least once a month, and they tell us in our survey that they prefer it. And then Paytm, which everyone knows in India, 85% used by customers. But then UPI, the national real-time payment scheme, actually is basically interoperable across wallets and across bank accounts. So a combination of UPI, PhonePe, Paytm, and a handful of other wallets gives you really incredible coverage and incredible conversion rates by customer. What do some of these things mean? What they mean is, what local credit cards look like or what credit cards look like. E-wallets could be expressed as a QR code. They could be expressed as a one-time message that comes back to the user so they can confirm a payment. They might be logging into their bank app from their phone and confirming a payment and bouncing back. Local card schemes, some look quite a bit like regular card schemes with some additional fields of data. And then cash payments often look like a code that you enter in the store at a terminal, and not all terminals will have a scanning gun. So we'll actually key punch something onto a 9-key keyboard, which is a code looks like what you see on the right. One of the questions we often get is around the conversion rate or the authorization rate. As you can see, these are not bad authorization rates. Pay Now, which is a real-time payment scheme in Singapore, we're seeing 83% plus conversion rate versus credit cards at 81% because you've got 3D Secure and other factors which make the first-time payment a little bit challenging in some markets, even though second-time payments will be much better for credit cards. 77% for Grab, bank transfers, 74%, even though it can be a completely wonky experience, everyone's very, very familiar with it. So these are not rates to be too concerned about. These are rates, and also remember, these represent buyers that want to purchase from you, who are motivated, right? They're not going to go from trying to pay with a Filipino e-wallet to magically pulling out a credit card because they don't have a credit card, right? They're not going to be successful with a credit card that they don't have. And that's why it's so critical. This isn't just about offering them one payment method or another. It's about offering them the payment method that they choose to pay with when they want to become your customers. So localizing the payment methods can be extremely costly and confusing for a variety of reasons. One, it's expensive to individually add payment methods. It's not something you're necessarily going to be able to do remotely. You might need a local entity. You might need local bank accounts. Most payment gateways, even in the developing world, are very, very card focused. Local preferences actually change quite quickly. Year on year, things go up, things go down. So there's a lot of option cost to making some of these decisions. And the risk of holding local currencies can be a bit challenging as well. So when you look at local payments, does it matter much? Grab is an example. One of the several strategies they deployed to be successful relative to Uber in Southeast Asia, which has exited the market, is actually to lean in very, very heavily on local payments in all 8 markets in which they operate. They were able to give drivers payment methods that they wanted to get paid in, give consumers payment methods and the ability to hold funds in methods they wanted to pay with, and really create an ecosystem of payment on 2 sides that was very, very locally tuned to the individual markets in which they operate. And it led to great success for them. So what's the good news? This is the Rapyd sales pitch part, right? And so Rapyd, what we've gone ahead and done is built a new global payments network, right? So we can offer over 900 different payment types in 100 countries in 2 million cash locations around the world. We're connected to more than 4,000 banks. We accept more than 50 e-wallets. And we can actually issue cards as well in a number of markets. So our goal really is how do we reduce the option cost and reduce the, improve the ROI of implementing local payments around the world, through our global network. We offer numerous payment methods, whether it's cash, bank transfers, cards, and wallets in every market in which you're going to operate. And we've even moved into more advanced payment experiences, whether it's escrow services to help you better manage buyer and seller risk across the border, whether it's storing balances so you can collect funds up front and then create a subscription type of experience if that matters for your business. So you can have the experience you're looking for with a card, but using payment methods that are not card-based, and really provide an overall flexible experience. We provide global payouts. So if you're running a marketplace type of business, you can actually pay back your suppliers or your sellers online. You're keeping all the money in one ecosystem, all managed by the same trust framework and all managed by the same set of APIs. On the disbursement side, similar to the collection side, we actually ran another study in 2020 as well to look at disbursement preferences. What you can see is that 77% of Indians, 77% of Malaysians, et cetera, are all active eWallet customers and actually like to get money in their eWallet, whether it's coming from a personal payment or a business payment. 32% of Thais still actually get paid their salary in cash, which means paying them or paying a seller might be very difficult unless they have a clean bank account in some way. And so offering options makes a lot of sense. And then overall, if you look at the bottom middle, it says that in 4 markets, the buyers or the beneficiaries they actually value receiving payments real time more than they value paying no fees. So people are actually willing to pay a premium or to pay some cost to get paid that much faster and quicker, which is a pretty powerful insight. It tells you a lot about the fact that people's expectations have changed and real-time payments has become the dominant way in which people want to pay. So thank you for your time. I really appreciate it. If we have any more time, I'd love to take some questions.